Good morning, ladies and gentlemen, and welcome to the show. Glad to have you guys here on the 28th, Monday, the 28th of December, 2020. Hope you guys had a nice Christmas, or tried to anyway. It's hard out there for people. We got, they say 12 million people who are having difficulty in the United States. You have to understand that that's what they have on paper. It shows 12 million. There is people associated with those people that are affected by this. And so you can multiply that probably by at least a factor of 2. So you probably make it at least 24 million, but I'm guessing a lot more. I'm guessing it's more like 50 or 60 million people who are finding it really hard right now. They got bills piling up, Okay, what's going on with this? This was a big, big tell. What I call a tell. In other words, it'll tell you the future if you observe what's happening in the present to a certain degree. And what did the president do? He yielded. He signed the bill. Why is picture it this way. If you were an employee in a nuclear reactor and you had a kind of a cushy job, you could sit around most all day long and not do a whole lot, just sit in the chairs and talk with your buddies and stuff. If you seen one of the reactor cores needed water, if they overheat, you get the China syndrome, where, like that movie, with the China syndrome. But if the reactor overheats, and you're watching the dial, and the heat of the reactor's going up higher and higher, and you got to open a valve to let water in to cool it down. Well, it's a critical situation. If you don't cool that thing off, the whole place is going to blow. That's the way with these. They're not telling you. These guys are not going to tell you this. What I'm telling you right now. The politicians. But they know that if they don't cool this thing down, she's going to blow. In other words, there's like probably 50 million people out there. And if they don't pour that money out, then everything's just going to, the jig's up, in other words. So they got to open up the valve and let the money out. Just like a guy working at the nuclear reactor has to open up the valve to cool that thing down, whether he wants to or not. Maybe he doesn't want to for some reason or another. And that was like them. They didn't really want to do stimulus. They don't want to do any more stimulus. They want to balance the budget. I don't know how they'd ever balance the budget, but some of them out there are very conservative and they want to balance, try to at least maintain some sort of decorum surrounding this situation of money printing, but they can't. And that's why I say this was a big tell. This shows they will keep doing this, whatever it takes to keep the economy from totally collapsing. And I don't blame them. This is what they should do. But what's it going to do to the dollar? The dollar is such a big, enormous thing out there. Massive, all around the world. It's already begun, what's happening. And, I see cryptocurrencies as taking advantage of this the most, even more than gold and silver, because they can suppress the price of gold and silver to a certain degree using those paper short contracts, which is totally unfair. But there it is. They've been doing it for ages. But, the money, the liquidity, the more they print now, the more is going to flow into these cryptos. And this is a cycle that's begun. And I don't see any real stop to it, and everything's pointing in that direction. All of the other avenues to invest, right now, everybody wants yield out there. Any investor wants yield. And where are they getting yield? Are you going to get any yield in treasuries? And, the stock market now is starting to hyperinflate. So, yeah, the stock market's going to continue to go up. As long as they keep pushing this money out there. And they're going to keep pushing. It doesn't matter what the real economy's doing. It doesn't matter if every single business in America is closed except for Walmart. It doesn't matter. They're going to, this thing is going to keep trudging in the direction that it's trudging in. And we're going to see cryptocurrency continue to take gains, and so is gold and silver, but not as much. Gold and silver is keeping up with inflation, basically. The cryptocurrency is outstripping inflation. And now, what we see, these things are in motion, are going to continue in motion. And this was a big tell when we saw what happened by them approving the bill, sending the bill out there, even though the bill was a bunch of, I don't like it. All the stuff they had on there to, hidden in those 5,500 pages. I said 6,000 pages the other day. I was wrong. It's 5,500 pages. But still, who can read that? I mean, if they plopped it down your desk, it'd be a stack of paper about 6 inches thick. Who can read that? Anyway, but they passed it through. And this shows the desperation within government right now to try to keep this thing running. What we have is nothing less than an overheating nuclear reactor of an economy. And money is the only thing that cools it down. Very temporarily, too. It's a situation that's gone out of control. And they're just going to have to keep pumping because just like a nuclear reactor, the situation would be dire for the entire world if they let it melt down. This is the same sort of thing. If they let this melt down, it's going to be dire, worse than dire for the entire world. And so they have to keep cooling it down with liquidity or creating money. And the eventual outcome of this is obvious. Should be obvious to everyone what's going to happen. So you better start thinking about divesting from dollar-associated investments and start thinking about slowly building a portfolio for yourself that is out of the dollar. And there's very few avenues out of the dollar. But this whole pyramid scheme's toppling down now at this point. And what's just happened with the president signing this thing off, even when he didn't really want to. And are you guys going to get the $2,000 or the $600? I don't know for sure yet. I think you're going to get 2,000. I think you'll find that you'll get, but I'm not certain about that, so don't hold me to it. Anyway, let's get the charts open and take a look at what's going on. Let's open up the charts right here and take a look now today at the silver price. It's up 61 cents. Let's just keep carrying on. Silver and gold are going to keep up with inflation, or nothing else will. But will you make gains beyond inflation? I just don't know, but I'm pretty sure you'll keep up with inflation. And that means the price is going to explode even still, because the price of the dollar, what you can buy with your dollar, is going to go down, 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 down. Meanwhile, gold and silver are keeping up with what you used to be able to buy. So in other words, if you bought a lump of silver, an ounce of silver, back when it was $15, say you paid $20 for it. Now it's up to like 35 or something like that, All that's done, you can still buy the same amount of stuff out there as you could back. But, if you kept your dollars, you wouldn't be able to buy the same amount. You would have lost about 30% by now or something like that, The same amount, the silvers went up. And it's going to continue to do this because it has done this all the way through history. If you go back years ago, what a man's suit would cost. It cost an ounce of gold. A fully tailored suit with the shoes and everything else cost an ounce of gold way back in the 1920s. Well, it still pretty much buys the same thing in purchasing terms. Because that's the job of gold and silver, is to preserve your purchasing power where the fiat currencies won't. Take a look at cryptocurrency today. Well, we didn't do gold. Silver's at 26.40, but where's gold today? Let's take a look. Gold today is at 18.78. It's up 10 cents. Cryptocurrency today is at 729 billion. Imagine that. It was only like 200 and something billion. That's just a few months ago. That's 729 billion. 68.9% Bitcoin dominance. And normally in a market, something that would be a normal thing, you'd say to yourself, well, we've had our bull run in cryptocurrency and it should start to drop off now. We're in a bubble. That's what you'd normally say under normal circumstances. These are not normal circumstances, guys, that's happening in the world right now. And the driver behind cryptocurrencies is still there. And so we might be looking at something that's still in its infancy of what it might do, you know. And this should be scary to everyone because the amount of wealth, if once cryptocurrency, once Bitcoin's market capital goes above 3 trillion, in my estimation, it could create some sort of a black hole effect where it just sucks in the world, all of the world's everything, you know, and a mad rush out of the fiats, and everything comes out of the fiats and goes and transfers over. That could happen, you know. And how long would that take for us to get to 3 trillion in market cap? It could happen pretty quick as it keeps climbing and climbing and climbing. It's over 500 billion right now, heading for a trillion. There's first trillion. I figure somewhere around 3 trillion, it would black hole the world. Will it do it? Well, we'll have to wait and see. Dow Jones Industrial Average today is up 235 points. Now, you know, this is hyperinflating too. It's up to 30,400 and it's heading to 40,000. Dow 40, that's where it's heading because it's hyperinflating. That's because they cannot stop the presses at this point. They're going to have to keep this. So they send 2,000 out to everybody in the United States. And when the people spend that and they start to run into trouble again, you think they're not going to do it again? They're just going to do it again and do it again. It's going to get worse and worse and worse because those jobs aren't coming back. And they're keeping adding more unemployment to the lists all the time. So they're going to have to support everybody in the United States by sending them money. Well, what happens to goods and products and stuff? Because those people aren't producing anything. I mean, how many are going to find work from home? And what is that all about? Can everybody work from home? And what do you make when you're working from home? Well, you're still consuming. You still have to buy a computer to work from home. And that somebody has to make the computer. Well, the Chinese are over there in their factories making computers like mad right now. But, I mean, that's just more wealth to China. And goods and services, goods especially, goods and commodities over here, somebody's got to make the goods and commodities, and I can only see the prices going up higher and higher and higher on all this stuff because nobody's making it. Crude oil today is 48.02. It's down 21 cents. Let's take a look at the MOVE index. Now, the MOVE index is dropping, and this indicates that this stimulus has worked on the credit markets. This is a direct result. The fact that the MOVE index is dropping today is a direct result of the stimulus measures they just took. That's the effect it has. It lowers the MOVE index, stabilizes the credit markets. So the credit markets are becoming more stable today. Let's take a look now at bonds and rates. Bond yields have ticked up a little bit, and you know they're going to have to put their foot on the pedal. They're going to have to They're not going to let these go up. The whole system will fracture and break if they let these go up. Just like the people out there, they're not going to let 30 million or 50 million or however many million are affected by this fall off the cliff and starve. They're not going to let that happen. And the same thing with these bonds. They're not going to let these bond yields rise. They're not going to let the U.S. 10-year rise more than say probably 2%, probably at the most, you know, and the U.S. 30-year, they're not going to let it rise over 3%. You know, they're just not going to let it happen. They're just going to buy it. They're going to buy all the treasuries. They'll do whatever they have to do. Have to understand something else, too. When you get Janet Yellen on one side, and you're creating a loop there between the government and the Treasury. The Treasury and the Federal Reserve are making like a loop. It's a closed money loop. It's like a money vortex. And it spits money out, this loop. So what you have on the loop is you have the borrower of last resort and you have the lender of last resort joined together in a little tight little loop. So that they can just sign off on something. Basically, the Treasury and the Fed have merged together in this money creation machine. And it can whirl the money out, you know, it's like a blender. It's like a blender in reverse. It just whirls money out. It makes a tornado of money. And There's no end to it. I've been saying this for a long time now. They can make as much money as there are leaves on the trees on the outside your house and in your neighborhood and in the whole forest. What's the money going to be worth? Absolutely nothing. But people still use it, even though it's going way down in value. Even when it gets so it costs $1,000 to buy an apple, people will still use the currency. At a certain point, it becomes totally worthless. This is what happened in Germany. And they just dump the money into the street, and then some guy has to come along, sweep it all up, and burn it, or whatever, because it gets to the point where it's worth absolutely nothing. But that takes a while. This doesn't happen overnight. It doesn't get to that point overnight. During a hyperinflation, there's a period there where the money's losing value so fast, everybody wants to spend it as soon as they get it. But things stay running because they get paid from work or whatever, and they'll try to spend the money as fast as they get their money from work, but still they're working for that money, so the system stays running in a hyperinflation. The opposite of that, in a deflation, if they were to let the system collapse now into deflation, the whole system would lock up and everything would come to a stop. And in that kind of a situation, I mean, it's just total mayhem, chaos, total. That's what they're not letting happen. That's what they're not going to let happen. And that's why we're going to have a hyperinflation. Just the hard part is when. When are we going to have this? And I've been trying to figure that out. It looks to me like probably 2022. That's what it's looking to me like. It looks to me like we're going to go into the acceleration phase this year. This new year is 2021, and it's probably going to last all year, the acceleration phase, where we experience 1970s style inflation that they can't check because they can't raise interest rates. So they can't check it. That's what they did last time. Paul Volcker in the 70s was able to raise interest rates up to nearly 20%, and they were able to check the inflation, but they're not able to use that mechanism. That's a very powerful mechanism that they don't have available to them anymore. Okay, U.S. dollar today, 90.33, and on the U.S. dollar index, and I guess my chart is stopped. So thank you guys for listening. Like and subscribe and comment and all that good stuff. And we'll catch you guys in tomorrow's show. Bye-bye.